Welcome to Market Momentum, AI, and Analysis.
All right, so here's what we've got on tap today. We're going to follow the money, starting with the one thing that's really driving everything in the global markets. Then, we'll see how that impacts precious metals, stocks, and, of course, crypto. And you'll definitely want to stick around for the end, because we're going to look at a long-term forecast that, well, it could change the entire game.
Okay, let's dive right in. Look, if you want to understand what's happening in the global market today, you absolutely have to start with the main character of this whole story, the US dollar. Seriously, every other asset is kind of just sitting on the sidelines, waiting to see which way the dollar moves. So why is it so important? Well, think of it this way. A strong dollar is like a giant magnet. It just sucks in capital from all over the world, pulling it into US assets. But when the dollar weakens, that money flows right back out into other places, like commodities or international stocks. So yeah, whichever way the dollar goes, that's where the world's money follows.
So a bunch of technical signals are basically flashing green for the dollar right now. Now, don't worry, we're not going to get bogged down in all the technical jargon, things like the Ichimoku cloud or the Kaufman moving average. All you really need to know is that these are tools traders use to measure market momentum. And the key thing is, right now, all these different tools are pointing in the same direction, up. This is a huge clue that a new wave of dollar strength is starting. And believe me, that's going to send ripples through every other market.
Okay, so that brings us to precious metals. If the dollar is gearing up for a big move higher, what does that mean for something like gold or silver? Well, historically, that's a pretty big headwind for them.
And speaking of metals, let's talk about silver. It just hit a massive psychological level, $50 an ounce. We haven't seen that since way back in 2011. So naturally, everyone's asking the big question, is this the top, or is this just the start of something much, much bigger?
But hold on a second. Is $50 back in 2011 really the same as $50 today? No way. I mean, we all know that's not how it works, right? To get a real sense of what that old price means, we've got to adjust it for inflation.
And the way we do that is actually pretty simple. You just take the official inflation numbers, the Consumer Price Index, or CPI, and use it to translate that old price into today's dollars. That way, you're getting a true apples-to-apples comparison.
And check this out. When you do the math, that $50 peak from 2011, it's actually equivalent to about $72 in today's money. Now that completely changes the conversation. It totally reframes what the real target for silver bulls might be. So let's put it all together. What's the bottom line here? Well, while there are signs pointing to even higher prices, the general feeling is that chasing silver right at this moment is pretty risky. The advice seems to be pretty clear. If you already own it, hold on tight. But if you're on the sidelines, you might want to wait for a better entry point.
Okay, now let's switch gears to US stocks, because here, a strong dollar tells a totally different story. For precious metals, it's a headwind, but for US stocks, a rising dollar can be like pouring gasoline on the fire for indexes like the S&P 500, because it just pulls in all that global investment.
And the mindset in the stock market right now is, wow, it's crystal clear. Every single dip is seen as a buying opportunity. It doesn't matter if it's political drama, a weird economic report, any bit of bad news is just seen as a chance to buy in at a discount. Nobody seems to be thinking about selling. And just to put things in perspective, let's look at the history books for a second. This bull market, it feels like it's been going on forever, right? But believe it or not, at 3 years old, it's actually still younger than the average bull run. So if history is any guide at all, this thing could still have plenty of room to run. So the big question is, where could this all be headed? Well, if you factor in the possibility of future interest rate cuts from the Fed, and you combine that with the kind of crazy parabolic move that often happens at the end of a bull market, well, you start to see some really wild projections. I mean, some analysts are actually throwing out a target of 9,000 for the S&P 500. That's a big number. Okay, but while the stock market is having this huge party, the crypto world is, well, it's telling a much, much more tense story. It feels like it's caught in a vice grip. Yeah, see, crypto isn't really trending up or down right now. Instead, the price is getting squeezed into this tighter and tighter little corner. Technical analysts call this a wedge pattern. The best way to think about it is like a coiled spring. You just know it's going to explode with a massive volatile move. The only question is, up or down? And right now, it really looks like that spring wants to break to the downside.
Bitcoin is testing a really critical support level around $121,345. And Ethereum? It's already broken through its floor at $4,000. If these levels can't hold, things could get ugly fast. The selling could really pick up speed.
So let's recap. We've got a stock market that's flying high and a crypto market that's on edge. But there's this big long-term forecast looming out there that could just come in and change everything we've been talking about. Because let's be honest, those crazy euphoric moves in the stock market, they don't usually end well. And this isn't just some theory from a chart. We're talking about some of the heaviest hitters in the financial world sounding the alarm. Take the CEO of JP Morgan, for example. He's openly warning about a possible recession in the next couple of years, which he says could lead to very large sales in the market. When guys like that talk, people listen. So this all points to a potential playbook, a cycle we've kind of seen before. First, you get one last big rally in the markets, the blow-off top. Then, things get shaky, maybe the job market weakens, then boom, the recession hits, maybe sometime around 2026, and you see a massive sell-off across the board. But then what happens? Central banks step in with tons of stimulus, and that fuels the next huge rally, especially in assets like gold and silver. So you've got this immense risk right in front of us, but also potentially massive opportunity on the other side of it.
And that really leaves us with the million-dollar question for every single investor out there, right? How do you balance this? Do you try to chase this rally that's happening right now? Or do you start getting ready for a completely different reality that could be just over the horizon?
Thanks for joining our analysis. If you got some value out of this today, your subscription and likes will be appreciated.